Hello and welcome to Bloomberg Quint's Market Wrap. I'm Navneet Saluja D'Souza. Well, clearly for benchmark indices, today was a day of consolidation, but sharper cuts seen for the broader markets today. Let me first talk about the Nifty constituents. Some bit of support actually came in from stocks like, as you can see on the screen, Kotak Mahindra Bank. After some of the brokerages increased the target price, that counter was quite strong throughout the session. The other heavyweight which supported the index today was ITC, and clearly HDFC twins, which have nearly 16 to 17% weightage in Nifty, gave some support. But on the losing side, your metal stocks came under pressure. So Vedanta, Tata Steel, all of them saw cuts, and also ICICI Bank continues to reel under pressure. Also, you had something like Yes Bank from the private banking space, which was down almost 2% in trade. And I was talking about the broader markets, which came under severe pressure in the second half of the session. The market breadth was clearly not good. The Nifty mid-cap index was down 1.5%. As you can see, PC Jewelers, which has lost nearly 60 to 70% in the last 6 to 7 sessions. Century Textiles fell after posting its March quarter numbers, which clearly disappointed the street. And once again, the metal stocks like Jindal Steel and Power and something like IRB Infra, that too was pretty weak in today's trading session. Well, you did have a couple of the auto stocks which were in focus on back of the monthly sales number. We'll get you more detail, but first, a word on market. We've got a market editor right here with us, Neeraj Shah. Neeraj, it looked like a day of consolidation, but the way broader markets corrected in the second half of the session, it looked like there was some bit of selling pressure which came back into the markets. I
think we were talking about it in the show countdown as well, and I would want Navneet to come in on the liquid universe as well. But yeah, I think Navneet hit the nail on the head. The broader market correction and a clutch of names falling apart as if this really tough news that has come in. Yes, the result reactions for companies like Century Textiles, maybe a Marico were all warranted, but a clutch of other names came off quite rapidly in the session today, which was probably a bit disconcerting. Are we seeing supply at higher levels? That remains to be seen. The results today, by and large, were not necessarily up to the mark. Started off with HCL Tech, and maybe the guidance, maybe the small miss on the numbers, maybe a combination of all of this led to that stock coming off. We've seen what's happened to some of the others too. So hitherto we were all seeing small upticks in results getting rewarded disproportionately over the last 10-15 odd sessions. We're starting to see some big punishments being meted out to companies which are missing earnings as well, which is all very fair. The question mark only is that in this next couple of weeks, wherein there will be heightened nervousness across the world because of central bank activity and announcements and the run-up to the Karnataka elections, will companies which have even erred a little bit, will they get punished disproportionately? And if that happens, what happens to the overall sentiment? I think that would be the case. Almost everybody makes no bones about it, Navneet, that the next big event, the Karnataka elections, would have a big bearing on the sentiment, and therefore watch out for that. But I don't know how the action was in the liquid universe. Sure enough, the volumes would have gone up, but was there significant build-up in companies which disappointed numbers or otherwise? Oh, definitely, as you rightly mentioned for Century Textiles. But I also want to highlight, as Neeraj said, there was some selling pressure. If you look at the premium on Nifty future today, that fell to nearly 15 to 60 points from 40. That was telling you there is some bit of selling which was coming around the mark of 10,750, or some bit of consolidation. Remains to be seen where we are headed from current levels. So let's get some technical view from Amar Singh of Angel Broking, where he sees the market going forward.
What we're seeing is that the strength still continues to be there, and there's on the bullish momentum, and also buyers are looking at buying stocks. Yes, we've seen some sell-off across Nifty stocks, as you rightly said, on the metals pack. We've seen them, but overall the trend I would say still remains positive. So any pullback in Nifty can be used as a buying opportunity. I would say somewhere in the region of 10,720 odd levels, that can be a good level to buy, with a stop loss of 10,645 and a target of 10,830 to 35 on the upside.
All right, we'll wait and watch if there is any sort of pullback which takes place tomorrow or not. But on to some major developments of the day. We've got Vishy here. Vishy, Ultratech is back in the game to acquire Binani Cement's plant.
That's right. Looks like it, because the NCLT order very clearly directs the lenders to sort of go back to the discussion table, look at the Ultratech bid again, revised offer that is from Ultratech. Ultratech on its part has been asked to submit a fresh bid within the next 3 days, and Dalmia, which is the other sort of bidder in the game, they've been given this opportunity to sort of match Ultratech's bid if they so choose. Essentially, the process has gone back to square one. and to that effect, the NCLT has also extended this entire period for the corporate insolvency process to the 24th of June. So, you know, they're taking out this entire litigation period and bringing it back to the 24th of June, which would give enough time for the COC to consider a fresh round of bids if they so choose. That is also mentioned in the order. It's important because this was an order that was looked out for, because there was a possibility, there was a chance that there would be an out-of-court settlement between UltraTech and the UltraTech Binani Industries as well as the lenders. But the NCLT is clearly in its order does not mention anything about an out-of-court settlement, so that is clearly out of the picture. And we spoke to Sameer Kaji, senior advisor for Binani Industries, who's also said that you know, that discussion is now closed. As of now, the promoters of Binani Cement, they don't seem to be in the picture at all. The discussion remains between three parties at the COC, Binani Cement, the UltraTech Cement as well as Dalmia.
I wonder where these bidders were before these companies actually went to NCLT. Thanks a lot, Rishi, for bringing all that development with regard to Binani Cement's flat. But on to some big earnings of the day. You had auto major Hero MotoCorp coming up with its March quarter numbers, which looked pretty much in line with what the street was estimating. But Yatin, the stock corrected today, right?
Yeah, the stock corrected. The margins were tad below the street expectations, but you know, earnings more or less probably discounted by the markets, or some profit taking came in. If you look at Hero MotoCorp standalone revenue, there was a growth of 24%. Standalone margins came in at 16% versus the Bloomberg poll of 16.1%. So, you know, it was a stable set of numbers. If you look at the absolute EBITDA also, that growth was 43% on the back of higher volumes as well as, you know, better than expected margins on a year-on-year basis. So the numbers for Hero MotoCorp more or less healthy. Of course, the management commentary remains to be seen as far as the rural markets are concerned, because, you know, they have been growing significantly higher than the urban markets for the past few months. And any bit of slowdown there or any bit of blip in the urban demand should be watched out for. But on an overall basis, Hero MotoCorp fourth quarter earnings meeting the street expectations.
Okay, so meeting the street expectations, that was the Hero MotoCorp earnings, but you could have some changes with regard to MSCI index. Which are those stocks or other companies which could enter, which are the companies which are likely to come out? Darshan Mehta is here to take us through all those details. Darshan.
Yeah, so Morgan Stanley's come out with this note on the possible inclusion or exclusion. The high conviction includes two stocks, Power Grid as well as Pidilite Industries. Both of them are large cap stocks, and they believe that, you know, because of the free float market cap, these are the two potential entrants that could come in. The other companies which could come in, but the conviction is likely low, is counters like Avenue Supermarts, Future Retail, HDFC Standard Life as well as Interglobe Aviation. So these are the company, but because of the free float, it becomes a low conviction for them. Two stocks in which they believe weight will increase. First of all is UltraTech, which could see inflows to the tune of $50 million, and Container Corp, which should see inflows to the tune of $40 million. Recently, RBI has hiked the FI limit for these counters, and that is why they believe a potential weight increase could come in. And two stocks wherein the free float has fallen below the threshold level, and Morgan Stanley believes that MSCI exclusion could happen. One of them is Tata Motors DVR, and the second one is Wakarangi.
Okay, thanks a lot, Darshan, for bringing all those details. Well, today was the day when there was a lot of reaction seen on basis of earnings. And remember, the steel counters, the metal stocks were down. And tomorrow, you've got the earnings of Vedanta, which is a Nifty constituent. So we'll be watching out for that. But for the time being, it's a wrap on this edition of Bloomberg Quint's Market Wrap. Thanks a lot for watching.
Sorry, I'm late.